big news regarding Wells Fargo, Bank of America, and Goldman Sachs. We'll start with you, Brian. And what's standing out? It seems to be a story of net interest income and a difficult environment for the banks, right?
Good morning, Adam. The second half of the big four U.S. banks did report before the market bell this morning. As you mentioned, net interest income got crushed at both companies. Keep in mind, Bank of America and Wells Fargo are both consumer-focused banks, more so than JPMorgan Chase and Citigroup, which reported yesterday. But net interest income, the money that you make off of loans subtracted by the amount that you pay out on deposits, got crushed at both companies, down 19% year over year at Wells Fargo, down 17% year over year at Bank of America. That led to the mixed results that we saw with Wells Fargo missing on the bottom line, although they beat on revenue. Wells Fargo getting some help from mortgage banking income, but expenses do remain high. As you know, they're trying to clean up their reputation. A lot of expenses going into there that hurt their bottom line. Shifting over to Bank of America, they did beat on the bottom line, 51 cents per share versus estimates of 50 cents, but they missed on the top line, revenue coming in at $20.3 billion compared to estimates of $20.8 billion. Fixed income really hurt them there, whereas JPMorgan Chase, Citigroup, Goldman Sachs hitting it out of the park in this quarter in terms of fixed income trading. They were down 2% year over year. Again, compared to JPMorgan Chase, where they increased 6% year over year, in addition to Citigroup yesterday up 18% year over year. So it wasn't the same good quarter that they saw at Bank of America. Again, both of these consumer-facing banks hoping there's a real bottom for net interest income. Bank of America CFO Paul D'Onofrio saying this morning he thinks that they've hit a trough on that with interest rates so low, but they really hope that their bread and butter businesses can come back as the economy recovers at the end of this year.
Brian, let's go to Julia LaRoche, because when you mentioned bread and butter business, for Goldman Sachs, asset management and trading are bread and butter. And I want to quote from your article on Yahoo Finance, Julia, where you said, quote, blew away Wall Street's estimates. Tell us more about Goldman.
Yeah, that's right, Adam. Well, when you look at Goldman Sachs's third quarter, specifically looking at the EPS, the earnings per share, it came in at $9.68. That tops analyst expectations of $5.57. Keep in mind, that is a record quarter for Goldman Sachs. Now, net revenues came in at $10.78 billion, topping out those expectations of $9.45 billion. And when you're talking about the bread and butter business, it's the capital markets business for this Wall Street giant that continued to shine bright, as well as the investment banking business. But let me just run you through real quick some of the revenues we were seeing for the quarter. For trading, it came in at $4.55 billion. That is up 29% from just a year ago. The fixed income, currency, and commodities sales and trading business hit $2.5 billion in revenue, while equities trading generated $2.05 billion. Collectively, those two businesses account for 42% of the firm's revenue. And also, I mentioned that investment banking also continues to be a bright spot. And one of the other areas, when you think of Goldman, that a lot of folks have been paying attention to lately has been that consumer and wealth management business, which posted revenues of $1.49 billion in the quarter. That is a record for the consumer banking business. A lot of that was, of course, driven by credit card loan balances. One thing to note, and this came up on the earnings call, Adam, the consumer deposits grew to $96 billion. That grew by about $4 billion from the prior quarter, maybe a little bit slower, having to do with some things going on in the UK, but also the lower rates, just given the extremely low interest rate environment. And then just another thing I think is worth bringing up. We talked about a Reuters report earlier about Goldman's medium-term goals that were set at the Investor Day earlier. That came up on the earnings call, and CEO David Solomon called that report false, and that they haven't had discussions internally about changing those goals. And if anything, on the call, they were talking about maybe talking about new opportunities that have come up because of the pandemic. These are 3-year goals. We're a little less than a year in at this point. So I suppose look for more of an update on the fourth quarter earnings call in January to see what they do there.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.